Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day. Wednesday, Hump Day, halfway through the work week for the working schlubs. You're not actually schlubs. I don't think of y'all that way. But anyone working Monday through Friday, 9 to 5s, you're halfway done with the week. If you're like me, and you do a little more work on Saturday and Sunday on the weekends, then we're nowhere near halfway through. Because there is no halfway through. It just keeps on going. But the thing is, if you work on the weekends, even just a little bit extra, that gets you ahead. Everyone else is only working 5 days. You're working 7. That means 3 weeks in, you're working an extra week. Throughout the year, you're working 17 extra weeks. 17 extra weeks in the year. 17 extra weeks of productivity if you work on the weekends. Ish. All right. Let's dive right into the charts. So, from yesterday, we were projecting this bear flag to go out this way. We were hoping to see this head and shoulders pattern form out. It failed. Did not break out like we wanted it to break out, like I wanted it to break out. Oh, don't need that. Let's get rid of you. Wait, what did I just get rid of? Oh, yeah, no. Get rid of you. And then I want to get rid of you and you and you and you. Well, not that. I wanted to get rid of this head and shoulder. This right shoulder and the projection of the head and shoulders. All right. So the projection of that bear flag didn't quite play out like we projected. In fact, it's more like... playing out more like this. Now, the measured move, we take it from where price action is now, currently at the bottom of the channel there. Well, we're looking at a downside all the way down to about 77,000 doll hairs, which is actually a support level, one of the major support levels that we have. Is it? Yeah, there was some stuff down here. There was some bobbing and weaving. But yeah. So yeah, we got a few support structures below us as well. We got that 85K support here that we've seemed to have come to and stopped at. But yeah, we can get rid of this as well. That's just like a retracement back up. We'll leave that there for now. We are seeing a double bottom forming here on the 90-minute chart as well, possibly. If we don't see price action dump down, then we may just see it pump back up. With a double bottom there, if we see price action staying pretty much where it is now, while the stochastics RSI get into overbought territory or just find a bottom and start curling over and start their oscillation back up, well, then that double bottom may actually occur, and then we may see it come right back up to where we were yesterday or 2 days ago, back up here at 96. Maybe stop here at 92. I mean, we did, drop from there. The W could just lead up to 92, and if it does, well, that's that 618 on this retracement to the upside, and that could be a point where we find resistance and come back down from. Hopefully not, but maybe. So let's watch for that W pattern to play out or for this bear flag to play out. Those are your two moves. Can't tell you where Bitcoin's going. I don't know where Bitcoin's going. All I know is what the charts are showing me. Right now, I'm seeing a possible double bottom that could bring it back up to either 92 area or all the way back up to that 96 area. Bumping right up to that 200 MA, which is hanging out at 95.5-ish. But yeah, so let's see what happens here on the 90-minute charts. We are seeing a little bit of divergence here with RSI putting in much higher lows. It seems like, I mean, the RSI could continue down here and that divergence could disappear. But if it finds a bottom right where it's at right now, well, then that would be a divergence. As we can see, price action is forming flat bottoms. Bottom here, same bottom there. But here, RSI is putting in higher bottoms. That's a bullish divergence. That adds strength to this double bottom thesis that we have going on. So a little extra strength for that move back up to 92 at least. But yeah, if we move down to, if the bear flag hits, well then 77 is the measured move for it. But we have some supports on the way down. We have that 85, we have 82, and 82 being the measured move of this bigger bear flag that hasn't actually completed yet. So perhaps even if that bear flag on the 90-minute chart hits and goes to the downside, like it may be happening right now as we're watching, because it's breaking down out of that pattern there, price action is, perhaps it will. Oh, what am I doing? Oh, I got a line. I don't need a line. I need the grabber, and then I'm going to move this down just a little bit, like that. Okay. So yeah, I mean, it's still pretty much flat there. We're watching for price action to hold roughly around here and RSI to hold roughly around here to project some bullishness. Now we are seeing RSI here on the 6-hour chart in oversold territory, though its signal line is also pretty high still, although it could bounce right back up. The signal line doesn't usually get that low. It's so low, got that low here. But yeah, so you see, whenever we get into overbought territory, or I'm sorry, oversold territory, we do seem to bounce right out of it. What happened here? That was this one. Came down, came back up. Let's find another. Nope. Back here, we came down. Came back up. Came back down. Put in a higher low. Lower low here, that was bullish div, and then came back up for a higher high. So hey, maybe that's what'll be happening. Maybe that's what'll be happening. We gotta watch and see, but that could be happening. If we can see that divergence hold and price action move back up into the 90s, well, hey, we could invalidate this bear flag, and possibly the bulls have a chance to move it back up, and maybe, bull runs back on. But maybe not. This could also be the end of the bull run. Why do I say that? Well, we did hit a new all-time high before the halving, Yeah, let's take it out like this. Oh, beep. Let's take it out like this. We did hit a new all-time high before the halving. So perhaps everything's pushed back a little bit, or forward a little bit. So perhaps our peak isn't at our usual April-May area, but here in January, December-January. Well, December-January. This one was December. That one was January. So yeah, I mean, maybe not. We're getting real close to that 200. That could be a bouncing point. Could also be, if we move under it, could be the end. We're going to watch for that 50. If we see that 50 moving average, that orange line, get under that 200, we're going to for sure call it as bear markets here. But until that happens, until this big bull flag on the daily is invalidated, well, we're still going to say the bull market's still on, or possibly still on. But right now, the likelihood is getting less and less as we move down. So yeah, let's watch for movement on the 90-minute chart. Could also, for the Stokes to turn around and for this divergence to hold while the Stokes turn around, head upwards, showing us some bullish strength. Maybe this double bottom plays out and we see 92 tonight or tomorrow. Or the bears take control and this bear flag hits. Well, maybe we'll see the completion of this move down to 82, or this bear flag hits and we see ourselves going all the way down to 77. If that happens, I think things will get bought up fairly quickly down here in 77. That would be below the 200, by the way. If we get under that 82, well then, hey, we're below the 200 on the daily. We see this play out, we're at the 200. If we're near that 200, I mean, that might be a good spot to load up if you think the bull market's still on. But if you're scared, then I hope you've been taking profit. All right. Thank you so much for watching. The music today is provided by, as always, Luminist, Veloa, and Sax Squatch. You guys are awesome. Give us a like, a subscribe, follow, whatever platform you're watching on. Much love. See you later.